continued balance sheet growth and a robust performance in insurance and asset management have bolstered Standard Bank's full-year earnings. South Africa's largest banking group by total assets said its local franchise delivered double-digit earnings growth, supported by increased client activity and improving credit trends. We get deeper insight into that performance from a group's CEO Sim Tshabalala, who joins us now. Thank you so much for your time, Sim. Now, you posted positive financial metrics across the board. Headline earnings per share climbing 4%, and the return on equity is within the target range. What were your highlights in this reporting period?
So first of all, thank you ever so much, Nati, for this conversation. I always look forward to talking to you. The highlights were firstly the method of, the way in which our colleagues managed costs. Cost, as you and I know, is the one thing that we can manage and is within our control. And I'm very proud of the cost discipline in our organization. Secondly, I think what does stand out is the fact that our balance sheet continued to grow. And as a result of its continued growth, we ended up with really robust net interest income. You know, the function of a bank is to take deposits and lend money. That's the central activity that we do, and that was a great outcome. And in South Africa, we saw an acceleration of that balance sheet in the second half of the year, which was really good. What was also important to note in that context was that the consumer's health continued to improve as interest rates declined by 75 basis points and inflation improved. People's ability to meet their obligations as they fell due continued to improve. And as a result, our bad debts, our credit loss ratio improved. Our trading revenue, particularly towards the end of the year, improved very well. Great work out of the global markets business of Standard Bank. And then the real standout, of course, was also the fees and commissions out of the South African business, the business led by Funeka Munjane, but in particular the South African business, their fees and commissions were up 12%. Why that is relevant is that that's really an important metric to measure. Firstly, do we have the right number of customers? Yes, 16 million. Are they doing more with us than with anybody else? Yes, they're holding more accounts with us, more transactional products with us.
Yes.
And are they willing to pay for the fees that we charge them? So that was a great result. One last point, if I may, is that in South African rand, we grew by 4%. In constant currency, in other words, in the currency of the countries where we operate, we grew by 14%, which bespeaks just the health, the underlying health of our operations and our franchise.
Yeah. I do note the strong growth that you've seen in, your acquisition of clients and also client activity. I want to actually drill into the credit landscape with that, because I mean, I wonder if, how tough of a balancing act it is, particularly in the lending space, to fight for market share and still keep your debtors book healthy.
Yes, so of course, you've hit the nail on the head. We have got a large home loans book, as you know, it's the largest in the country. And it grew anemically during the course of the year, in large measure because more competitors were coming back into the home loans market. Secondly, other parts of the book grew, but they also grew slowly. So if you take our entire retail book, it grew slower than private sector credit extension, in particular household credit extension, but it grew nonetheless.
Yeah.
I have to say, and as I pointed out to you, that growth accelerated, however, in the second half of the year. And we've seen the data into the first 2 months of this year that show a continued acceleration in the growth of our retail assets. So yes, people are continuing to borrow. We saw a deterioration in bad debts in 2023, but that has improved in 2024. Why is that improved? It's improved because interest rates have declined, inflation has reduced. While some people had been struggling, that number of non-performing loans is starting to wash out and will improve into 2025. So yes, when people are suffering affordability issues, you saw an increase in early arrears, an increase in non-performing loans. Those early arrears are starting to slow down, as is the non-performing loan book as a result of this improved affordability.
And of course, Sim, we know that, no sector and no business can really thrive sustainably without, solid economic growth. We did have the budget out yesterday. Some people arguing and asking themselves if it was a pro-growth budget. In terms of what was tabled yesterday, what are you most encouraged by, or where would you have liked to see more weight being pulled?
Perhaps let's think about the data and what it means.
Yeah.
South Africa, we think, will grow at 1.7% in 2025. That's sort of based on the analysis by our economists. It's sort of the base case.
Yes.
We also believe that if there is continued consumer and business confidence, if the structural reforms continue, we could see growth of close to 3%, if not above 3%, even in 2025. That proposition you find prominently in the budget that was tabled. Importantly, fiscal consolidation is important in that context, in that the authorities are wanting a debt to GDP ratio that peaks at 76.2%, which is lower than what is penciled in by the ratings agencies for the short and medium term. So if there is success in debt in fiscal consolidation, this will be good for the country. I think, Zinati, there's a challenge always and trade-offs between costs and revenue. Revenue, as you know, if they pass the budget with the VAT increases, will have a diminution on people's ability to spend because it will reduce disposable income, but it will improve the country's budget position. It will also help with the management of our debt. But the big theme, of course, is this need for growth, the need to facilitate the execution of Operation Vulindlela, to improve the ability and the health of municipalities, and then also to improve the strength of state-owned entities. And in fact, you saw in the budget, they got tough love, the state-owned entities.
Yeah. And I mean, as we're talking about growth, Standard Bank does play a role in mobilizing finance into very important areas of the economy, including infrastructure. And I actually want to talk to you about, on your capacity, in your capacity as the chair of the B20 Infrastructure and Finance Task Force. What are you targeting there in that G20 agenda?
So first of all, we need to accept that South Africa has to take its rightful place in the family of nations, to quote that beautiful preamble to the Constitution of the Republic of South Africa. And part of doing so is chairing the B20 and the G20, and importantly, in delivering the best ever G20 and B20. So that's the first place to start. Secondly, the G20 has got themes that have been chosen. They revolve around equity, equality, sustainability, and solidarity. Big global issues that South Africa is wanting to drive. The B20 in that context wants to align itself with those outcomes, and that infrastructure and financing task force will focus on these broad categories. Firstly, making a contribution to the reduction of the cost of capital for the African continent. Secondly, making a case for the need for multilateral agencies to change their mandates to make it easier for the African continent to have access to financing. Thirdly, and very importantly, improving the ability of the continent to finance the transition in response to climate change. And then lastly, importantly, facilitating the entry of SMEs into value chains and doing so in a manner that adds to employment and economic growth on the African continent. All of that happening in the context of global fragmentation. But as South Africans, we will be making the case for these improvements in the global financing environment in a way that reduces that global fragmentation.
And of course, these are very, very important themes that we will be focusing on as South Africa grows its economy, where hopefully we will get to that 1.7, 1.9% level, but also as we really cement our role in the global community. Thank you so much for your time, Sim. That was Sim Tshabalala, Standard Bank Group CEO.